2025 is shaping up to be a pivotal year for the real estate market, with many eagerly watching to see if interest rates are finally starting to drop. After several years of record high rates, many prospective buyers and homeowners alike are wondering if now is the time to act. In this video, we'll dive deep into the real estate outlook for 2025, examining the trends driving interest rate movements, the key factors influencing the market, and whether buyers should be optimistic or cautious. So, is relief finally in sight, or are we facing another year of uncertainty? Interest rates in 2024, a quick recap. To understand what's happening in 2025, let's first look back at 2024. Over the past few years, the Federal Reserve has been raising interest rates to combat inflation. For homebuyers, this translated into higher mortgage rates, often exceeding 7% on 30-year fixed loans. The Federal Reserve's tight monetary policy was driven by inflationary pressures, geopolitical instability, and global economic slowdowns. These factors made 2024 a tough year for real estate. Affordability became a significant issue, leading to a slowdown in home sales and in some areas, even a correction in home prices. With higher borrowing costs, many potential buyers chose to sit on the sidelines, waiting for a more favorable market. But what exactly is changing in 2025? Are interest rates really dropping in 2025? There has been widespread speculation that 2025 will be the year interest rates finally begin to drop. The Federal Reserve has hinted at easing its rate hikes, and some analysts believe the central bank could even cut rates if inflation falls to more acceptable levels. The question is, how likely is this scenario, and how much of a rate drop can we expect? While early 2025 has shown some modest reductions in interest rates, experts caution that significant decreases may not occur until later in the year, if at all. The Federal Reserve remains focused on controlling inflation, which means it's unlikely to aggressively lower rates unless inflation slows dramatically. As of now, mortgage rates have dipped slightly, falling to around 6.5% in some areas. This is still higher than the pre-pandemic rates many buyers are hoping for, but it does offer some relief compared to the highs of 2024. However, buyers should be aware that any drop in interest rates will likely be gradual and measured, not the steep decline that some are expecting. Factors influencing interest rate movements in 2025. Several factors will determine the trajectory of interest rates in 2025, and it's important to understand what's driving the market. First, inflation remains the key concern. While inflationary pressures have eased somewhat, they're still above the Federal Reserve's target. The central bank is closely monitoring economic data, and any sign of renewed inflation could cause rates to stay elevated. Second, the global economic landscape plays a major role. Geopolitical tensions, especially in regions like Eastern Europe and Asia, continue to impact supply chains and global trade. A major conflict or disruption could have ripple effects across the global economy, leading to uncertainty in financial markets and potentially higher rates. Third, we have to consider the labor market. The job market has remained resilient, with unemployment staying relatively low. If the labor market remains strong, it could support higher consumer spending, further complicating the Federal Reserve's efforts to reduce inflation and, in turn, keep interest rates higher for longer. Impact on buyers and sellers. So, what does this all mean for buyers and sellers in 2025? For buyers, the gradual drop in interest rates might make the market more attractive, but affordability will still be a concern. Home prices, while not skyrocketing like in previous years, have remained relatively stable in many markets. This means that even with slightly lower mortgage rates, buying a home will still require careful financial planning. For sellers, 2025 might be a better year than 2024, but challenges remain. The drop in interest rates could bring more buyers back into the market, especially first-time buyers who were priced out in previous years. However, sellers should be prepared for a slower market compared to the red-hot conditions of the early 2020s. Price growth is expected to remain modest, and in some areas, it may even stagnate. Regional differences in the real estate market. One important thing to note is that the real estate market is not a monolith. Different regions are experiencing vastly different conditions. In cities like New York, San Francisco, and Los Angeles, high prices and elevated mortgage rates have made home ownership difficult for many. In contrast, cities like Austin, Nashville, and Phoenix have seen more stable markets, though they too face affordability challenges. In 2025, we expect to see these regional differences continue. Some areas, especially those with high population growth, may see stronger demand for housing. This is particularly true in the Sunbelt region, where cities like Miami and Charlotte continue to attract new residents and businesses. Meanwhile, markets in the Northeast and West Coast could remain sluggish, with fewer buyers able to afford the high cost of living. Section 6. What should home buyers do in 2025? Given all of these factors, what should potential home buyers do in 2025? First and foremost, it's essential to stay informed and work with trusted financial and real estate professionals. While interest rates are showing signs of easing, it's important not to rush into a decision based solely on the hope that rates will drop further. For those who are ready to buy, locking in a rate early in the year might be a wise move, especially if rates remain volatile. It's also crucial to consider the overall financial picture, including down payment, closing costs, and long-term affordability. Refinancing options could also become more attractive if rates continue to decline in the coming years. For those who can afford to wait, it might make sense to hold off and see how the market develops. If inflation slows and the Federal Reserve decides to cut rates later in the year, buyers may find themselves in a better position. However, waiting also carries risks, especially if home prices continue to rise or if the economic landscape shifts unexpectedly. The real estate outlook for 2025 is one of cautious optimism. Interest rates are slowly starting to drop, but buyers and sellers alike should approach the market with a clear strategy. Inflation, global economic factors, and regional differences will all play a major role in shaping the year ahead. Whether you're planning to buy, sell, or simply watch the market, staying informed will be your best asset in navigating the real estate landscape of 2025. Thank you for watching. Be sure to subscribe to Free Pizza for more in-depth insights and stories.